$1 million. Fannie Mae and Freddie Mac have changed their loan limits to up to $1 million. So the question I had all last week, what does a mortgage payment look like at close to $1 million? What's going on, guys? My name is Minh with What's a Mortgage. Welcome to our channel. The goal of our channel is to simplify home ownership. If it's your first time tuning into our channel, do me a huge favor. Please hit that notification or subscribe button so you're notified every time we go live or post new content. We go live every Monday night on Facebook and YouTube, and we post content daily on Instagram and TikTok. Remember, this is an interactive stream, so ask a lot of questions. Tonight, if there's a specific payment you want to see on a specific purchase price, please let us know. We'll be doing that at the end. Also, guys, I really need you to participate tonight because I think a lot of people are wondering, what's the payment going to look like? If you know inside of you that you want to buy a house in 2022 and you're just curious what the payment is, tonight's the night to ask. Let's get into it. So breaking news, FHFA. So when it said FHFA, everyone's like, it's FHA. No, it's Federal Housing Finance Agency. Sounds kind of like FHA, but it's FHFA. To back mortgages up to $970,800 in 2022. So in 2021, inflation pressed. People's wages went up. A lot of people can afford more homes. The problem is, how can they save that money? With cost of homes going up, gas, cost of living, everything went up. So even though they can afford the payment, the hardest problem was saving for that bigger down payment. So FHFA wanted to bring these buyers back into the market, create more opportunity for them to have a chance to buy home. So they changed the loan limits. So what's with this new loan limit with 2022? We're going to bring in a new class of buyers. So a lot of people who stopped buying, who decided they cannot buy because of down payment. So because loan limits weren't high enough, people had to come in with a difference if they hit the loan limit. Especially if you're in California, Riverside and San Bernardino County, homes were too expensive at that price they want to get, and it was above the conforming loan limits. So if you wanted to buy that home, you would have to come in with above the loan limit or 10% down and go with a jumbo loan. How can you do that and also cover the appraisal gap? What does that mean? So if a home, you wrote an offer for $600, but it came in at $590, you would have to come in with $10,000 difference if you still want the home. If you did agree to the seller, you're going to come in with a difference. To come in with that difference and then coming with the loan limit difference made it really hard. It made a lot of buyers back out from buying a home. So many buyers had to give up. It was the biggest struggle. But in 2022, that has changed. And look at the change comparison here from 2021 to 2022. Look at the conforming loan limits from 2021. So the max loan limit for conforming was $548,250. Of course, a lot of you guys say, well, in Orange County or LA County or San Bernardino, I can still go 3.5% down. Yes, because you have a high balance loan limit for FHA, VA, and USDA. But if you're going with a conforming loan or areas that don't have high loan limits, you are capped off. So they changed the loan limit nationwide. They changed the max loan limit, or the max loan limit in 2021 was $565. So if you stayed at $565, you can go 3% down and buy your home. In 2022, you can go up to $667, which increased it by over $100,000 in home. So now, my perfect example, if you take a $600,000 home, if you try to buy it in 2021, the max loan was $548. So you would have to come in with $52,000. But in 2022, with the loan limit going up to $647,000, you bought a home for $600,000, it's only going to cost you $18,000 out of pocket with the minimum requirement of 3% down. So it's going to bring those buyers back. The ones that looked in areas where $565 wasn't enough, maybe $575 and $590. When you got into that $600,000, homes became more desirable. But the problem was that down payment. So now they can go 3% down. I know a lot of you guys are thinking, well, even if they can go 3% down, Home Ready, Home Possible has an income limit. Yes, they do. I completely agree. How can you go with a higher purchase price if the income limit was a lot lower for Home Possible and Home Ready? So because of that, a lot of people say, oh, I can't buy even if the price went up. You got to look into the Home One program. So Freddie Mac has a program called the Home One program, which does not have an income limit, which means you can still buy a home in the regular conforming loan limits with just 3% down. Your max debt to income ratio on these programs are pretty much between 45 to 47, close to the maybe 45%. Remember, they're not taking big risks. So if you are looking to go with the minimal 3% down, you want to have good credit. You want to be in that 720, 740, 760 credit score. And it doesn't matter what your income limit is. So those are the big changes happening from 2021, 2022. So homes that were in the 600s, 650, now they're back. Now you don't have to go 10% down. You can go 3% down, or a lot of people can go 5% down. I think the 5% down is going to be very strong in 2022. Now let's look at our high balance. So if you're above the conforming loan limits and you're in an area like LA County, Orange County, San Diego, San Francisco, they're changing the limits. Alaska, Hawaii, look up your county loan limits. Look at 2021, the max loan limit, $822,375. The max purchase price, $865. That's already good, 5% down. Look at 2022. You can go up to $1,020,000. $1,020,000 with just 5% down. So think about it. For $50,000, you could buy $1 million home. I know a lot of you guys are wondering, what does the payment look like? I'm gonna get there. But see how you're bringing another class of buyers. That might not be you, but there is a lot of buyers. That's a lot of new buyers or old buyers entering back into the market. This is a class of buyer where payment was not an issue. Saving for a bigger down payment was an issue. Coming in with the gap and coming into the loan limit was an issue. That's going to eliminate that for a lot of these buyers, especially like I said, Riverside, San Bernardino County. If you feel like you lived in an area where the houses were in the sixes, that's where your price point was, but the conform loan limit was at 548, you were out of the race. Now you're back in. Outside of Southern California and certain parts of Northern California, nationwide. Imagine this, nationwide. Let's go back to the regular conforming loan limits. You can go up to 667. If you look on Redfin, Zillow right now, what does a home look like at 650? You will see super nice homes. I look in Reno, Nevada. You got new construction for 650. So imagine $20,000 out of pocket gets you an amazing home everywhere else in the United States. Look up 650. Pick an area in Texas, Florida, Montana, Washington, maybe not Seattle, but look anywhere else in Washington or Oregon. Most places in the United States, it's allowing people to get homes with less out of pocket. Nowadays, times have changed. A lot of people are coming minimal out of pocket because they're not staying in their house long enough, or they're coming out of pocket minimal and they're taking the rest of their money and they're investing it. So that's the type of buyers that are transitioning into housing in 2022. More millennials, more Generation X, the ones that have different mindsets. So think about, these are the buyers that we're looking at. If you are that buyer, your window just opened. If you are not that buyer, will things change for you in 2022? Let's look at it. Here's the moral of the story. It will not solve mortgage payment issues. Because the loan limit changes, it's not going to solve. It's just going to allow you to buy up to that certain dollar amount with minimal down. This will bring more buyers. What does that mean? That means the market's not going to cool down. So let's say if rates do climb, will prices slow down? We don't know. Now we just brought in another class of buyers that have a chance to buy. If rates go up too quick, it can cool it down. But remember, a lot of people were disappointed because they couldn't buy in 2021 because of loan limits and that appraisal gap. It was hard to win both fights. But now you only have to win the appraisal gap because the loan limits went up. So it's creating more opportunity. So if you didn't buy in 2021, here's your chance. If you were going to wait it out, waiting for some crash to happen in 2022, it's not going to happen. Another class of buyers are going to enter in the market, which is going to make it really hard to see that market cap off or go down. I feel like 2022 is going to create opportunity, but it's also going to create, I call it the Jesus moment, where you wake up and go, what? I might have to think about, how do I still make my income today, but move further away so I can afford more home? Or how do I go and get a new career change? If you do a career change, we are going to do a video next week. When can you buy after your career change? So don't forget to check that out. But let's get into it. Hopefully this information was valuable to you. If it was, do me a huge favor. Save this video, share this video, and like this video. So what does $1 million look like? Let's look at it right here. So purchase 740. Since the new loan limits are now, you haven't updated the calculator yet. James, if you're watching this, you know who I'm talking about. So also, if you know your tax rate, I'm going to do just California tax rate since I am in California. If you know your county tax rate, our city tax rate, please let us know. So here we go. 5% down on $1 million. See, the PMI is going to be 0.44, 5714. So imagine this, buying $1 million home with 5% down. Your payment is going to be $57 5714. It does sound like a lot, but remember, you're getting $1 million. $1 million home, 5714. Let me verify the numbers here. Million, 5% down. Closing cost about 20 grand. Interest rate 3.375. There's your APR for all the Karens out there, all the hater rates. Oh, you can't quote this without an APR. Got your APR right here, 3.546. Total payment 5714. So $1 million home, you got to make more than probably $12,000 a month without debt if you want to get your hands on this home. I don't ask you guys for much. I know there's an imposter out there right now trying to be me, ask you guys for a bunch of things. I'm never going to ask you for money. I'm never going to try to sell you crypto. All I ask is that you share this page and you follow this page. All right, guys, we want to end all our episodes with our attitude is gratitude. Without you, there would be no us. So thank you guys so much. All right, guys, enjoy the rest of the day.